Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at Bitcoin on the macro, the weekly, the daily, and the short-term charts, going into massive amounts of detail, discussing everything you need to know about what is happening as we speak, what is likely to occur, and the possibility of a macro continuation upwards. We'll also be discussing the total altcoin market, discussing the possibility for an altcoin season, and so much more. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you're interested in taking your trading to the next level, join us in VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chats, our trading chart and education chat, our news, daily video help, and trade setup chat. If that is what you're interested in, to join over 700 members, contact us in the pinned comment by clicking my name or these links for more information. The VIP channel has been around for 40 plus months, so you can find our entire trading track record in there. Check it out. And let's jump on in. So taking a look at Bitcoin, we can see a very strong bounce on that weekly chart thus far, with a day and 1 hour remaining until the weekly close. So far, so good, bouncing up to touch that $60,000 mark again from the lows at that 52,000. We can also see on the weekly chart that the RSI is getting very close to retest and break through that 5.5 month long downtrend on the RSI, represented by our diagonal trend line, which would indicate a positive momentum shift, a massive point for the bulls. On the short-term price action, we'll see a established uptrend has been developing. The price action now sitting above the POC level and developing nicely. We'll be discussing what this means in a moment and what we are watching out for. Moving over to the market data, we're taking a look at our 24-hour volume and 24-hour liquidations. Taking a look at the volume, we are down 45% at 62 billion. Liquidations down 63% at 45 million. Of the 45 million in liquidations, 32 million have come from longs and 13 million from shorts. This is expected as we are in the weekend. We always see volume drop in the weekend, and as a consequence of lower volume, we see lower volatility, and lower volatility, lower liquidations. Moving into the broader markets, the DXY is still moving toward the downside, closed out for the week with a massive week coming up. We of course have got our economic data. Specifically this week, we are looking at one release, which is the most important. This is going to be on the 19th of September, Thursday at 4 a.m. for Australia. It's going to be on the 18th for USA. We've got the interest rate decision, and this event is going to be massive. It is going to have profound significance on not only the macro expectations for our risk asset markets, but the short-term price action and the immediate price action following the release. They are going to have utmost significance, and we do have that Federal Reserve press conference as well, which will be discussing the release of the interest rate data as well as future projections and expectations, which also have massive influences on not only short term but the macro price action. So stay attuned to that. As of right now, we do have a large degree of probability for a 25 basis point cut and only 14% for a 50. The 25 basis point will be the ideal cut. We do not want to be cutting to a 50, and that would signify that the government, that the Federal Reserve is worried about the economic state, and they're trying to really stimulate and ramp up economic growth at a profound degree. So 50 would maybe cause some fear and decrease overall confidence in the markets, and we could see actually correction following that. So ideally, we do want to see a 25 basis point. We want to see, as we see a slow gradual increase in interest rates, we want to see a slow gradual decrease in interest rates steadily over a period of time. We do not want to see that just drop down really, really quickly, just as we don't like to see it come up really, really quickly. So moving over to the S&P 500, taking a look at the S&P 500, we can see a great week for the S&P 500, almost engulfing that prior weekly candle. Again, we are in this horizontal chop zone, so the S&P 500 is looking very, very strong over here. We do not want to drop below 5,300. A loss of 5,300 results in a downtrend. This below this over here is going to be a high time frame downtrend. Above our 5,700 is going to be the high time frame continuation into 6,000, and between we are in a horizontal range. So we are expecting a continuation upward. However, if we do at any point see the breakdown, we would know that will spark the downtrend. So right now, we are in an aggressive uptrend. We have been for a very, very long time. We are expecting that uptrend to continue, provided we sustain 5,300. If we drop below, that is going to be the exit sign for the high time frame charts. That is it, guys. Let's jump into Bitcoin. As we said, we're going to be jumping over the macro charts, taking a look at the weekly, taking a look at the 3-day charts. We're going to be going into detail with a few indicators such as Ichimoku, such as the Bollinger Bands, such as our Gaussian channel. We'll also be taking a look at our momentum on our weekly, the daily range, the short-term price action, and of course, the possibility for an altcoin season. So without further ado, we'll get into it. If you do want 15% off your lifetime trading fees, you can sign up to the links down below to BitGet, BitUnix, or BingX. You'll get 15 to 45% discounts for life on your trading fees based on your trading volume. Again, you do need to sign up with the links down below to do it. You'll not only support the channel and support me, but support yourself to get cheaper fees. Go ahead and set it up and play an ad, watch the video, and we'll jump back into it. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it, and we are starting on the macro charts, discussing Bitcoin on the high time frame, the macro trend, and why Bitcoin is still undoubtedly bullish. Bitcoin is very likely to still see a parabolic season. It's highly likely we still see a macro continuation higher, particularly with the likelihood of interest rate reductions coming over the next couple months. As we know and as we have discussed on this channel in extensive detail, macro implications of interest rate reductions are inherently bullish for risk assets as a consequence of decreased cost of debt and the implications of lowering debt costs on households, individual retail, and the capacity for borrowing money to acquire income-producing assets for companies. All in all, the economic environment cultivates a scenario where risk assets end up thriving, and we don't have to go into more detail about that today. You can watch our prior videos, we've talked about it. But we do know the macro expectations for risk assets are inherently bullish as a consequence of this process. We do know this process takes some time, so we can't say for certain that the interest rate release is going to have an immediate bullish reaction, but we can say with a high degree of certainty that on a macro scale, we're talking many, many months, 5 months, 6 months, if not more, we are going to see risk assets behave more favorably toward the upside than not as the dollar decreases, as inflation starts moving back upwards and the cost of debt becomes cheaper. So we know that Bitcoin is currently in an uptrend. And we know that the macro expectations are bullish. If we look at the 4-year cycle, the 4-year cycle is projected to end October 1st, 2025. So we're looking at the 4-year cycle. I know a lot of people think the 4-year cycle is dead, and I kind of am on the fence about that, and I'll explain to why I am in a second. The expectation is that Bitcoin doesn't top out as per the 4-year cycle until October 2025. A common theory circulating is the shorter cycle, or we're going to see a earlier top, a left translated cycle. Now that theory is mostly bolstered on the fact that we saw a faster run up for Bitcoin in that accumulation phase, breaking through the prior high in a much rapid pace, around 244 days sooner than what we have seen in prior cycles. But it's important to really come back to the roots of what the 4-year cycle is and what it represents. The 4-year cycle does not go to express the structural formations of which that will develop between the points of date range significances, so the tops, the bottoms, and the accumulation phases. It doesn't go to explain the way in which Bitcoin will move. It simply suggests that macro tops will occur at this particular date, bottoms will occur at this particular date, and tops, bottoms, and reversals will occur at these particular dates. That is all the 4-year cycle does suggest. It doesn't go to try to justify how the price will move between those points. It simply identifies those points based on a date range scale, which is, again, in line with global liquidity supply and a whole bunch of other charts we'll get into at another time. So I think as humans, we like to assign different means to justify things. We like to find patterns where patterns are not always necessary, and we identify certain scenarios within the broader structure that are failing or that are moving quicker, and then we extrapolate that data to then potentially justify why this bigger picture may not operate or may not work. And I think that is inherently flawed, and I think if we look at the 4-year cycle, the only way to be sure the 4-year cycle is going to be accurate is to wait until it plays out, and only at the date of which the 4-year cycle ends on the 1st of October could we have any degree of certainty of whether or not the 4-year cycle is actually broken. But we're kind of diverging a little bit from the point. The point is that Bitcoin is still in a macro uptrend, and we can see this via a variety of different analytical methods. The first one is going to be looking at the Ichimoku cloud on the weekly. What we can see that is this is going to be our bear market resistance. This gray box is our bear market resistance. When we break above this level historically, we'll see a parabolic run for Bitcoin. We've seen that in our first cycle. We saw that in our second cycle over here, and we have actually seen that in our third cycle over here. What we've also noted that during these parabolic moves upwards, with extended continuations upwards on the macro scale, we see that Bitcoin remains above, okay? It remains above the Ichimoku cloud upper band the entire way until it eventually breaks below. And upon the breakdown, we enter a high time frame downtrend. You can see we break down, we enter a high time frame downtrend. We have yet done that on the weekly. We have not yet broken through that cloud, and therefore we are still in that macro uptrend according to what we have seen on the past. Now, if we're looking at it from a different scale, we can go to a 2-week chart. Now, the 2-week chart has a degree of significance. If we're looking at similarly at the same place of which we break up, we note, except the 1 point right over here, which is going to be a 2021 false top, we can see that upon the breakout of that resistance, we remain above the 2-week baseline, or at least the 2-week baseline acts as a macro level of support. And when we break below the 2-week baseline or break above it, we generally see macro reactions in the price action up and down. So we can see over here, the macro 2-week level, the baseline level is lining up with a major horizontal level of support, which happens to be that $49,000 level of support on the 2-week chart. Again, a yearly level of support for Bitcoin that will need to hold. So we have a degree of confluence at and around this region, which happens to be underneath our macro descending channel formation, which we know to be a bullish consolidation pattern. So if we were to break below this region, we would have sufficient confluence from a technical, from a structural, and from a trend perspective that we are now in a high time frame downtrend. And until that occurs, Bitcoin is bullish. From a process of elimination, Bitcoin will theoretically still be bullish, still in a uptrend. So let's move over to the daily chart. If we look at the daily chart, guys, the measured move expectation for Bitcoin, taking the width of a channel and applying it to the projected breakout point, let's just assume it's going to be over here, you can see that takes us into the $80,000 region. Now that is still a possibility for Bitcoin, and is a possibility of quite high significance. While we remain within this structural formation, a descending channel formation, the likelihood is that Bitcoin is going to see a bullish reversal. Only upon the invalidation of this channel, only upon the invalidation of this descending channel, meaning that the lower part of support is unable to sustain as support, okay? And the sellers show that they are willing to continue to push the price down below this region of support, which the buyers are buying, okay, and pushing up, okay? Only at that point do the probability shift in favor of a macro continuation downwards. If you think about this area of support, you've got buyers stepping in and pushing upwards as you have sellers pushing downwards. And at each time we retested this region, the buying pressure, okay, has been sufficiently stronger than the downward selling pressure, facilitating the price to bounce from that region. That is showing us that even though we have been in a downtrend, there is still significant buying pressure through this downtrend, facilitating this lower area of support to sustain as support. And that will continue until one or two things happens. The selling pressure and our resistance fades and decreases, facilitating buyers to take control, or the buying pressure at support decreases, facilitating sellers to take control. And we can look and we can measure what we would define that to be the strength of the price action in a way of which momentum. We can use momentum to assess the strength. Momentum is a derivative of price action and is a measurement of strength of the price action, as it shows the change in movement over time as a consequence of people buying or selling in greater or in greater quantities, volume, or whatever you want to say, over a particular period of time frame that we are viewing. So when we're looking at momentum, we can see that over the past 5.5 months, nearly 6 months, the price action has been moving down. The momentum has been moving down. We have been seeing a downtrend, right? That is pretty standard when we see a downtrend. However, what we are seeing now is momentum is cracking through, indicating for the first time in 5.5 months that the buyers are actually stepping in at a greater degree of strength. The momentum is now flipping back positive, and the selling pressure that has been pushing the price down at resistance over here all the way down to the range low is starting to exhaust. It is starting to weaken. The sellers have had 5.5 months to break this structure, and they have not done it so yet. They are starting to fail. That is an indication that the buyers will step back in and push the price upwards through that resistance. Now again, all of this is under the premise that we are going to see this structure play out as per what we theoretically see descending channel structures to play out as. There are scenarios in which invalidations occur. Nothing is of any certainty in trading, only probability. And the probabilities are in favor of continuations until we get the invalidations of those probabilities. And extending from that as well, we do know news events have massive bearing over directions of price action. We know news events have bearing because news events influence the emotion of investors, and the emotions impact the decisions of investors, and decisions of investors influence what we see on the chart to be the price action. So we know that significant changes in expectations or results in the news can influence the emotions of people, which influence the decisions, which influence the price itself. And that can result in the price deviating away from what has been a structure over the past 5.5 months, something to consider as well. Moving into the short-term price action, Bitcoin is undoubtedly in an uptrend, right? We have been in an uptrend now for a while. We broke out of this downtrending resistance, and we have been in an uptrend for Bitcoin ever since, slowly and surely, gradually climbing. At the moment, we have established an uptrend represented by our diagonal trend line. Provided we sustain above here, we are expecting Bitcoin to climb up to the 61,500 resistance. What we can see on the RSI is that we do have the RSI climbing. We can see we are very likely to probably see a breakdown on the RSI, which could result in a short-term correction. It is okay if we see a short-term correction. It is totally normal. We could see a short-term correction to retest that trend line at around 58,000. I wouldn't want to see this trend line lost. If we do, we could see a continuation back down to 55. If we see a continuation to 55, it is again not ideal, but it is okay as we are still holding this downtrending level of support. Only if we break below our prior lows of 52 would we be in any worry of this macro descending channel formation invalidating. and thus a continuation to 49,000. Until then, breaking above our prior levels of resistance, we are watching 61.8, we are watching 64,000 as our next targets of Bitcoin, provided our uptrend is able to sustain, but it is unlikely, and I'll say it one more time, it is unlikely we go all the way up to 64,000 prior to cracking this trend line, or at least retesting. It's possible, but it is unlikely. So that is Bitcoin, guys. That is a short-term price action. I hope that gives you a good understanding of what is happening. Let's jump into Bitcoin dominance and the total. The total market cap is looking very interesting. Now, if we take a look at the total altcoin market cap, we can see there is one level of major significance we need to hold above, and that is simply going to be this green box. And I've said it in our prior video, I'll say it again. Below this green box, below this horizontal support level, okay, this is going to be our yearly level of resistance and now become support this entire way. Okay, we had support up until here, and we had resistance up until here, and now it is support again up until whenever it breaks down. Okay, prior support becomes a resistance, prior resistance becomes support. Okay, simple as that. This area is a major area of support. This is yearly areas of support. A loss of this level enters this bearish phase. This is accumulation. We enter a high time frame downtrend. All right, deviation, failure, distribution, continuation into a macro downtrend. If we are able to hold above this area of support, it is highly likely that we will be continuing up to our next area of resistance, which is our yearly resistance. Now, put it this way. If the total market cap is able to continue upwards, we are very likely going to see an altcoin season. It is unlikely we'll see a parabolic altcoin season as what we have seen in prior cycles. A lot of people came around in 2017, saw altcoins go crazy. 2021, altcoins go crazy. But remember, there is so much more supply in terms of the options to invest your money this time around, as there are thousands of more altcoins available, okay? So everything is going to be slightly diluted. So it is unlikely we see every altcoin out there blow 100x, 10x. We will see a couple. It is likely we'll see a few. It is likely we'll see some top performers as always. But even when you look at meme coins, everyone thinks meme coins do fantastic. But the reality is the top performing meme coins are like 0.0001% of the total meme coins available. The top performers are what your eyes are drawn to. The top performers are the ones you see. The vast majority of these meme coins actually get destroyed. 0.0001% of the ones are the ones that do well, are the ones that you note, are the ones that you see on CoinMarketCap, are the ones that you see in the 100 million market caps. The rest of them get rug pulled, get destroyed before they even reach 1,000, before they even reach 100,000 market cap. Okay, so keep that in mind, guys. The dilution effect is going to come into a play. There are a whole lot more altcoins. It is unlikely the altcoin you're holding is going to do as well as you probably think it is. It is best to not set price targets. Better to assess the market as the price develops, okay? And of all things you shouldn't do is you absolutely should not make decisions based on the value of your altcoin bags, okay? Don't be like, I'm gonna sell my altcoin bag when it hits a certain price or it hits a certain number. That is not how you take profits. That is not how you should be assessing your positions. That is not what I do, and I'll tell you right now, if I have ever done that, which I definitely have, we've all gone down the same path of learning, all started in the same place, all gone through the same mistakes. I'll tell you right now, that is a massive mistake that I've noticed, particularly in my early days of trading, especially in the first year and a half, that I would highly recommend to try avoid. Thanks for tuning in. Catch you guys in the next one. See you then.